SpaceX went public on June 12, 2026, in the largest initial public offering in history. Within 3 trading days, the stock surged 67%, and the company was worth nearly $3 trillion. Then it gave all of it back. Every dollar. $1 trillion of market value appeared and vanished in 22 trading days. And if you have a retirement account, you probably own a piece of this story whether you know it or not. When Nasdaq added SpaceX to the Nasdaq 100 index on July 8th, every index fund tracking that benchmark had to buy shares. Index funds just own whatever the index owns, so they had no choice. Roughly $500 billion sits in funds tracking the Nasdaq 100. Your 401k, your IRA, your robo-advisor, if it holds QQQ, the most popular Nasdaq 100 fund, you now own SpaceX. The closing price that day was $149.47. Today, those shares are worth $136.97. That is an 8.4% loss in 7 days for anyone whose retirement savings are passively invested. So what does SpaceX's valuation look like in kitchen table terms? Imagine a local bakery that makes $100,000 a year in revenue and loses money every year. Now imagine someone values that bakery at $9.2 million. That is a 92 times sales multiple. You would need 92 years of current revenue with 0 expenses just to earn back what you paid. SpaceX is that bakery. The revenue is $19.3 billion, and the company is losing $9.36 billion a year, burning about $25.6 million in cash every single day. Now think about the people who bought shares directly. The stock opened at 150 on day 1. By day 3, it hit 225.64. Anyone who bought near the peak is down 39%. One Wall Street Bets user posted screenshots showing $80,000 in losses on SpaceX options in a single week. $50,000 gone on a bet the stock would reach $160. $30,000 on a bet it would hit $145. Both went to near zero when the stock fell to $136. And this was in a Roth IRA, a retirement account, where you cannot even write off the loss against your income. Let me walk you through the 22 days. June 12th, SpaceX priced its shares at $135, the largest offering in history, bigger than Saudi Aramco. The stock opened at $150, an 11% pop. By the end of day 1, it closed at $160.95, up 19%. Day 2, June 15th, it closed at $192.50, up 42% from the IPO price. Day 3, June 16th, the stock opened above $200 and traded as high as $225.64. At that moment, SpaceX's market cap exceeded $2.97 trillion. For a brief moment, it was one of the 3 most valuable companies on Earth. On that same day, at the exact peak, SpaceX announced it would acquire an AI coding startup called Cursor for $60 billion in stock. Cursor had been worth about $29 billion a few months earlier. SpaceX was paying a premium, and it was paying with shares that had nearly doubled in 3 days. Today, at $137 the share, that same $60 billion in stock is worth about $36.5 billion. Cursor's shareholders have lost nearly 40% of their deal value in a month. After June 16th, the air came out. The stock fell 9% the next day, then 5% more. By June 28th, it was at $154, down 27% from the peak in 4 trading days. It bounced between $148 and $171 for 2 weeks with no clear direction. On June 30th, it closed at $170.86, briefly looking like a recovery. Then the slide resumed. On July 8th, the day it joined the Nasdaq 100, the stock fell instead of rising. On July 14th, it touched $135.52 intraday, 52 cents above the IPO price. The round trip was complete. If you are finding this useful, hit subscribe. I make these breakdowns so you can understand what is actually happening with your money, not what the headlines shout at you. The closest historical parallel is Facebook's IPO in May 2012. Facebook priced at $38, opened at $42, peaked at $45 on day 1, then bled. Day 2, $34. Day 5, 30. By day 22, Facebook was down 16% from its IPO price. The decline kept going. By September, 4 months later, Facebook bottomed at $17.55, down 54%. Anyone who bought at the IPO and held through September lost more than half their money. It took 14 months for Facebook to reclaim its $38 IPO price. But those who held longer were eventually rewarded. Facebook, now Meta, trades at $671 today. A $10,000 investment at the IPO is worth about $176,000. That is a 1,066% return over 14 years. SpaceX's daily volatility is 7.18%. Annualized, that is 114%. The S&P 500's volatility is around 15% annualized. SpaceX is 6 times more volatile than the overall market. It moves an average of 5% every single day. Facebook's volatility during its first 22 trading days was 4.93%, annualizing to 78%. SpaceX is 46% more volatile than Facebook was at the same stage. Over the same 22 days, the Nasdaq 100 index declined less than 1%. SpaceX declined 8.7% from its first trade. The stock is swinging wildly while the broader market barely moved. Now the valuation. SpaceX trades at 92 times its annual sales. Nvidia, the most richly valued large tech company, trades at about 20 times sales. Apple trades at 7 times. Amazon trades at 2.5 times. SpaceX is valued at more than 4 times Nvidia's sales multiple and 37 times Amazon's. The company's net loss is $9.36 billion, a negative 45% profit margin. Its earnings per share is negative 67 cents. The price to earnings ratio is negative 191, a number that is mathematically meaningless. SpaceX has $23.68 billion in cash. At the current burn rate, that is about 2.5 years of runway. But the first quarter of 2026 showed a loss of $4.28 billion, which annualizes to $17 billion, nearly double the trailing 12-month figure. Trading volume tells the story of fading interest. On IPO day, 519 million shares changed hands. By the most recent full trading day, volume had fallen to 46 million shares. That is a 91% decline. Average daily volume in the first 5 days was 289 million shares. In the last 5 days, it was 54 million, an 81% drop. The market is losing interest. The SpaceX IPO was not pitched as a rocket company. It was pitched as an AI play. The company's IPO filing told investors its total addressable market was $28 trillion, with $26 trillion attributed to AI. The space business was a footnote, but SpaceX's AI division was a disaster. SpaceX had merged with xAI, Elon Musk's AI company, before the IPO. By March 2026, all 11 of xAI's co-founders had left. Every single one. Musk publicly admitted that xAI, in his words, was not built right the first time around, and that he was rebuilding it from the foundations up. The Grok chatbot had called itself Mecha Hitler in 2025. In early 2026, Grok was used to generate non-consensual sexual deepfakes of women and children. SpaceX disclosed these risks in its IPO filings and faces active litigation. The gap between the pitch and the reality is the core problem. SpaceX told investors AI represented $26 trillion of addressable market. The company's AI division has no co-founders, no frontier model, a chatbot that generated abuse material, and a $60 billion acquisition of a coding tool whose value has already dropped 40%. Cursor is a coding assistant. It does not build foundation models. It puts a user interface on top of models from OpenAI and Anthropic. The 26 trillion is not a number anyone can audit. It is a story, and the stock price is now reflecting the distance between that story and the actual business. The SpaceX IPO dragged the entire space sector down with it. Before SpaceX went public, investors who wanted exposure to the space industry bought shares in companies like Rocket Lab and AST SpaceMobile as proxies. When SpaceX became available, there was no reason to own the proxies anymore. Rocket Lab is down 49% from its May high. AST SpaceMobile is down 50%. Intuitive Machines, the company that landed on the moon in 2024, is down 82%. A single day in July wiped an estimated $89 billion off the combined market value of the space sector. Part of the bull case for SpaceX was the assumption that meaningful reusable rocket competition was a decade away. Then China successfully achieved its first reusable rocket landing. Japan separately launched and landed a reusable booster prototype. China's program is state-funded with no profit motive and genuine political will. If China can produce a reusable rocket at scale, SpaceX's pricing power erodes. The decade of monopoly assumption that underpins the valuation is no longer safe. Three forces will determine what happens next. First, lockup expirations. When a company goes public, insiders and employees are restricted from selling for 90 to 180 days. On July 13th, about 80 million shares were released from the 30-day lockup. That is a 12.5% increase in the tradable float, the number of shares available for public trading. A larger unlock is coming in August, when 90-day restrictions expire for early investors and employees. That could increase the float by 50% or more. More shares for sale, without more buyers, pushes the price down. Second, Starship Flight 13 is scheduled for July 16th. A success would be the biggest positive catalyst the stock could get. A failure would reinforce the bear case. Third, the fundamentals. SpaceX lost $4.28 billion in the first quarter. At that rate, the annual loss is $17 billion, nearly double the trailing 12-month figure. Cash runway shrinks from 2.5 years to 1.4 years. In the bull case, a successful Starship flight and strong earnings push the stock back above $180. In the base case, it trades between $120 and $160, while the market waits for evidence that losses are narrowing. In the bear case, the August unlock floods the market, the stock breaks below $135 and drives toward $100 or lower. So what should a normal person do? Three things. First, check your portfolio. If you own QQQ or any Nasdaq 100 fund, you now own SpaceX. If that concentration bothers you, rebalance toward a total market fund, which does not yet include SPCX. Second, do not average down on a stock you do not understand. SpaceX is a rocket manufacturer, a satellite internet provider, and an AI lab rolled into one entity that loses $9 billion a year. Third, watch the August lockup expiration. Waiting until after the unlock gives you a clearer picture of supply and demand. Facebook's IPO was a disaster too. It took 14 months to break even, but Facebook was profitable. SpaceX is not. The recovery, if it comes, will be measured in years, not weeks. What would you do with your SpaceX shares? Let me know in the comments, and subscribe if you want more breakdowns like this one.